Callum, what's gone wrong with this business?
So it appears there was a slowdown in orders since the European referendum a year ago, and also it's complained about delays to government projects as well. And that kind of thing is typical with this kind of business, but it's it started a full-scale review, obviously was forced to issue this profit warning this morning, part ways with its chief executive, and also suspend its dividend, which is a hit for investors as well.
Absolutely. Well, here's the share price. I mean, that is, you don't see one of those very often, a 39% drop in the share price every day.
Absolutely. But many people did see this coming. It was the most shorted stock on the FTSE 350.
So for the uninitiated, what does that mean, a shorted stock?
So effectively a shorted stock, that's when a hedge fund or some kind of institution, they borrow shares, they sell them on, they buy them back later for a lower price and then return them to a lender, return them to whoever lent them the shares, and then pocket the difference afterwards.
And so they will do that often many months in advance in anticipation of a big drop in the share price. So what were people so sceptical about Carillion for? Why were they shorting the share so aggressively?
Well, there was a feeling that something like this might come about, particularly after the referendum. This has been one of the most shorted stocks in the FTSE 350 for the past few years, but particularly over recent months there have been more and more people who have been shorting the stock. And so what we saw today, by the time the profit warning came this morning, was that 29% of its issued share capital was actually controlled by short sellers.
Wow. I mean, why would someone who holds the stock actually do that? Because they're effectively shooting themselves in the foot, aren't they? They're encouraging the share price to fall.
They are to a point, but at the end of the day, they've made a lot of money, and so those who shorted the stock actually generated paper profits of around £80 million today. Wow. So that's no small sum.
Won't be much consolation to the chief executive who's lost his job, of course, or to the employees. I mean, this is a really important company for the UK's infrastructure, isn't it? I mean, it's one of the top two suppliers to Network Rail, one of the two top contractors for the Highways Agency. I mean, it's a business that touches an awful lot of people's lives.
Of course, and so let's hope we hear from some of the institutions that were shorting the stock and have been shorting the stock over the coming years, over the next couple of months. I mean, let's have institutions like Marshall Waste, Thunderbird Partners, BlackRock. These were some of the biggest holders of short positions in the company, and they've made a hell of a lot of money today.
£80 million, as you say. Now, BlackRock, people's ears will prick up, where the former Chancellor George Osborne is being paid £650,000 a year to advise them.
Of course, yeah, and BlackRock actually has a slightly odd position with this company as well, because on one level it had quite a big short position, and it also has quite a big shareholding as well. So whilst it might have gained a lot, it may also have lost a lot in the value of the shares as well today.
Now, is there an expectation here? They've cancelled the dividend to shareholders. Is there an expectation that they're going to have to raise money? Because they've got something like, I think they said today, they're going to be about £800 million in debt by the end of the financial year.
Certainly, and that there is a feeling that they may have to turn to investors to raise some money over the coming months, potentially. But it's certainly, this feels like rock bottom for the company, and they've got a long way to come back from here.
Presumably, if you have gone short of the shares and you think there's a rights issue coming, I mean, you'd roll over that short position, or would you close it out?
They're keeping quite quiet today, some of the people who have short positions. Many of them are obviously quite happy with what's happened today because they've made a lot of money, but they're playing their cards quite close to their chest.
We heard an awful lot about this during the financial crisis, people shorting stock, particularly in those days, the banking sector. I mean, is there any sort of level of morality that comes into play here?
Certainly there were more regulation, there was much more regulation introduced after the financial crisis, and now actually if you have a short position of more than 0.5% in a certain company, you have to declare it, which is how we know about some of the names in Carillion. And we do also know that there are various other companies that are facing quite sizable short positions at the moment too, things like Ocado, Tullow Oil, even Morrison's and Pets at Home's, quite prominent companies like that who are also facing an issue with shorts at the moment. So
it's a legitimate financial exercise. It's a legitimate way for an investor to carry on.
It is, and it's quite commonplace.
And the interesting thing is, of course, you say a lot of the retailers are the ones who have been particularly targeted.
The retail sector appears right now to be the most prominent sector among the most shorted stocks. That's for sure. And as I say, so Ocado, Morrison's, Pets at Home, they're the ones who are really being targeted by short sellers at the moment.
All right, Callum Jones from The Times. Appreciate you coming on and talking me through that.